controls and bank rec, basically looking at the cash areas of accounting. There's not a whole lot to mention with internal controls. We don't go into a whole lot of depth here in this class. There is a small section in the book. I'm just going to go over some of the main points here, just a few terminology items, nothing real big. And then we're going to spend most of the time today on the bank rec. So a few items that you see I have up here, just to the reasons why we even have internal controls. You want to make sure you've protected all of your assets, things that you own. Remember what assets are. You've got to protect them, otherwise it's kind of just like protecting your house. You have maybe a security company, if you have one of those ADT, I think it is. So somehow safeguarding them, you're going to protect your cash, promote the operational efficiency. Of course you want to do that. You don't want to do things twice as hard if it doesn't need to be, or twice as long if it's twice as many supplies. So cutting down any extra work that doesn't need to be done. Making sure your accounting records are reliable. If they're not, you could be losing money, you didn't even know it. You could have extra money coming in and you weren't aware that that was a profitable side of the business, and you maybe cut it out and you just because you didn't know. And then finally, you got to make sure all the employees are on the same track, making sure everybody knows the policies. A couple ways to make sure that internal controls are met. One of the biggest areas that you'll hear a lot when you're talking about internal control is segregation of duties. So one person, the same person doesn't open the mail, write down all the checks that came in, record the checks in the accounting area, and then deposit the checks as well in the bank, or however you are doing that. You've got to break that up, and you've got to have more than one person looking at them to safeguard against any type of misuse of that money. A couple other things here. Making sure that your sales department or your people who are spending money aren't the same ones that are recording it. As I show here in the example with the sales, it's pretty likely that if somebody is recording sales and they're in the sales department, they're probably going to want to make themselves look a little better than they are. So there's a good chance that your sales would be inflated more than they should have been. And then people who purchase, who make large purchases, or if they handle cash, should not be the same people who also report it in the accounting records. You've got to have two different systems going on there, kind of a check and balance. Another way to help offset and to keep internal controls where they should be is making sure everybody knows what they're supposed to do and make sure it's clearly defined. Helps to, job accountability is a big thing. If they know that they're the one that's supposed to do it and it'll be back on them if something goes wrong, that really helps to detour any potential fraud that may come up, and make sure that tasks get completed. Audits are just ways of checking. It doesn't necessarily have to be just your books. You could have audits of other items, your practices in the business. Is everybody following the same practice and doing what is set out in the company policy? The last thing to hit here is there is no such thing as 100% safeguards or 100% quality ensured internal control. You could get really, really good internal controls, but it's going to keep costing you more and more to a point to where it's not even cost effective. It would be better to skimp out a little bit and to have pretty good internal controls, and it's not too expensive, rather than having awesome internal controls and it costs more than you and your business is worth. The other thing is employees can collude with each other and circumvent the system that's in place to help detect fraud, but if people start working together, it could be, they could go around that and hurt the business. The other main item that this chapter is going to talk about is the bank rec, and I wanted to just show a few main terminology words and why we even do a bank rec. The first item we do a bank rec is if you look at your ending balance at any time Usually now we would look at it on the website. It may say you have $5,200 in the bank. While you look at your checkbook, or you're looking at, if it's a business, you look at your cash T account and it says, well, your balance isn't $5,200. I show a balance of $5,600. Why is there a difference between what my books say and what the bank's up-to-date balance says? Well, there are some different reasons why that could be. And that's what the whole reason we do a bank rec is we need to update both sides. So I'll ask the question in a minute. Is the bank right with the $5,200, or is the company right with $5,600? Well, the answer is most likely neither of them, because each of them will know something that the other doesn't. And that's the reason you do a bank reconciliation. You're updating your books up to everything that includes that the bank knows, and then you're updating the bank numbers with everything that you know that the bank doesn't yet know. So some items that you know, the first thing we're going to look at here, and mainly these first two, are items that you, the company, know, but the bank doesn't know about it yet. The first one here being a deposit in transit. So you go into the bank, bank's still open, but you make a deposit. However, they have usually a sign out that says any items will be on the next business day. And thus, if the bank if that happened to be the cutoff day for your statement, that transaction that you made, it's showing up on your books as a deposit that you have the money, but the bank doesn't know it. So therefore, we're going to update the bank's numbers to get them in line with what really has happened. The other item that the bank wouldn't know about is any checks that you wrote. You know that you wrote the checks and you recorded it as a credit to your cash. However, if the company that you wrote the check to hasn't deposited that check, then the bank has no idea that you wrote it. Therefore, that's called an outstanding check. So outstanding checks will have your books have a lower dollar amount, while the bank still has a higher dollar amount. They don't know that you've spent the money, so there could be a definite difference there. So with these first two, and generally it's just only these first two, we're going to update the bank side. That's something pretty important with this lecture. These two items are going to be updating. We're going to update the bank's part of the bank reconciliation, the bank side. Because when we do a bank reconciliation, we're going to have two sides, and we're going to see that in just a minute. We're going to have the bank column on the left or right, doesn't matter, and then our column. And we're going to start with each of them's ending balances. So like the bank had $5,200, we had $5,600, and then we're going to work our way down, including deposits and transits and outstanding checks, and get what that final number really should be. The other items that I have listed on here are most likely items that we're going to have to adjust on our books. And a key item, anytime we adjust something on our book, on our side of the reconciliation, that also has to be journalized. The bank knows it, but we don't. We can't just affect it and make a adjustment on our bank reconciliation, because that bank reconciliation isn't really anything concrete. If we're going to do something in the bank rec, we need to do it in our official books and actually make a journal entry for it. So some things that come in. Collections, we got money coming in that was usually like a direct deposit. We didn't know that it came in. So that would be an item that the bank knows that we don't, and we would find that on the bank statement. Same with interest income. Somebody may have written us a bad check. We deposited the check thinking it was good, but then the bank turns around at some point later and we see it on the bank statement that says, no, that was a bad check. And when that happens, obviously our cash is too high. The bank says, no, you never received that cash. So we have more cash on our books than what we really actually have. And so we're going to have to make a journal entry to show that that person never really paid me. And I need to put it back on their account and take it away from cash. Service errors, service charge, usually the bank with any type of business will have a nominal fee. We need to record that as an expense. A lot of times it might be a miscellaneous expense because it's pretty small. And then if there's any errors, we will have to go back in and correct them. I'll have a couple errors in my example, but I don't think any of our assignments today for this class are going to have any errors, which I wish they did, but it's okay. Because that's going to be common when you're doing a bank rec. There's going to be an error somewhere. Somebody put something in the wrong account, or they just flipped some numbers around. It happens quite often. All right, so what I want to go to is an example that you will find in Blackboard in the resources. I'm going to pull it up. So here's my real simplified bank rec. They're usually a lot more complicated than this, but for this lecture, we're just going to focus on kind of a simplified version. So I have the bank balance in our example of $91.41, and the company books at $89.37. Now you're going to want to have this sheet up, because as I'm going through, I'm going to actually have up our answer key to show how the bank rec generally will look, and for you to be able to follow along. So I would have this up separately somewhere, because I won't be flipping back and forth. So we're going to have one side of our piece of paper showing a beginning or an ending balance of $91.41, and then our book showing slightly less at $89.37. And then I ask the question, who's right? And well, the answer is really nobody. Both of these aren't actually 100% correct. The bank knows some stuff that I don't, and we know some stuff that the bank doesn't. So we're going to update both sides, and when we're all done, both sides better balance. So as I say here, what we're going to do is start out making two columns, one for the bank, one for us. And then anytime we do anything on our side, we are going to journalize them. All right, I'm going to pull up the answers as we go through this. Okay, so here's our two columns. We've got our ending balance as of the end of October, the bank's column, and our column, and we're going to be adding and subtracting to these to hopefully get a final number that is the same, because we want to have our final true balance. So the first thing I tell us is, I'm going to move this around just a minute. All right, we had a deposit in transit of $1,103. A deposit in transit, that's something I know about. I made the deposit. But the bank doesn't know about it because it happened at the end of the day, and it didn't show up on their records until the next business day. So a deposit in transit, we need to add money to the bank's number. I don't journalize anything on the bank side. I'm not the bank. I'm not going to do their books. So that's something that the bank will have to worry about when they do get the check. So I don't journalize anything here. I just update my bank number to get a better balance and to see if it matches mine when I'm done. I also note in the problem here that we have 4 outstanding checks. And outstanding checks are, we've gone through and we looked at our cash account and we looked at the bank's checks that's showing up, and we noticed that 4 of them on our cash account aren't showing up anywhere. So I need to record those. Let's bring it down. So here's the 4 outstanding checks. I know I like to put the check number out here to the side to tell me for next month when it comes to it, I can go back easily and see if these checks were actually cashed. But these are items that I've already written off, and they are already deducted from my cash, but the bank has no idea that I wrote them. So I need to pretend that the bank does know about it. Okay, quickly look at my third one. Okay, here we had an error. We wrote it down that it was, we wrote a check for $523, but we recorded it for $532. Now we can write some of this out, but let's try to do it mentally here. We wrote it down in our books for $532. Therefore, we took out too much cash. We took out $532 out of our cash T account when it really should have only said $523. We had a little mix-up of numbers. because we actually wrote the check for 523. So when we're looking at the bank statement, it says 523, ours says 532. Well, that's obviously going to create a difference. So if we took out too much by $9, if you do the easy subtraction there, we need to add that money back to our books. And that's the first thing that I'm doing here. On our side, we had an error, and we took out too much money, 532, when it should have only been 523. So I need to add that money back to my T account. I also then am going to need to journalize that. So I'll come down here to my journal, and if I'm adding money back to my cash account, I need to show that as a debit. And then if I paid somebody, I wrote them a check, maybe I was paying on an account that I had, I need to show that I owe them $9 more than I originally thought I did as of just a few minutes ago. I looked on my account and I really owe them $9 more than what it had shown. I'll show those journal entries again here in just a few more minutes. The next thing, it says, okay, there was a bank service charge that shows up on our books. So we need to record that. We had a bank service charge. That's money taken out of my account that I wasn't aware of until I saw the bank statement. So the bank has already included the $6. I need to now include it in my books. Again, I'll show, instead of going back and forth a lot, I'll show these journal entries once we're complete. So we take out $6 from our side. Two more items. One of them is an NSF, which stands for non-sufficient funds. So one of our customers gave me a check for $125. In addition, there was a $25 return fee. The bank usually will charge you that to help make sure that people aren't doing it on purpose, give you a penalty. So the return fee is actually on me, the company, not on DM Scott. He doesn't know about it. But I'm going to charge him for that return fee. So what I have to do is go back to my books. My original entry would have been a debit to cash because he paid me for $125 and credit his accounts receivable. That would have been my normal everyday entry when I get a check. But when the check comes back as being bounced, non-sufficient funds, I need to show, okay, the AR account, I need to put back on his, not only the $125 that he still owes me, but now he owes me another $25. Notice I'm not going to call that an expense because it's not coming out of my pocket. Yeah, it came out of my pocket initially, but in the end, it's going to come from my customer. It's going to pay me back. So I'm going to put onto his account receivable $150, and then credit my cash for $150 because I don't have the $125. Plus, I don't have another $25 that the bank took out, and I need to record that on my books. I haven't updated my books, my answers with this. To make my books work, and I'm not going to go back and change it now, but I have just put this in, this little $25 fee, not in the too distant past. So to make that work, I need to go back up here and adjust these numbers just a bit. I need to show that this number was actually a little lower. So 91, let's go ahead and make this 21, 16, 9116, and let's make this, looks like I just typed it in there, 9116. I believe that will work now if we have 150 being taken out. Or maybe I already had done it. Let's go back to what we were, 93691. Somewhere I've updated it, but I didn't update it somewhere else, and I just got to figure it out. Okay, that'll work. So the numbers that I had were actually correct on my answer sheet, were correct over here. It is 9141 that we wanted to use. Sorry about that. So I just didn't have it updated in my final answer key here, that extra 150. So what I wanted you to see here is not that we didn't lose just 125, we actually lost $150 because the bank took out 25. The last thing it said, we forgot to write something down. The owner took out a little bit of money. If the owner takes it out, of course it's going to show up in the bank that there was a withdrawal. But in our books, it doesn't. It was just omitted. So we need to go in and show that $20 was removed. Now, if you take your beginning number, you add in your deposits and transits, you subtract out your cash payments. You do the same thing over here. We add in this error that we had, subtract out the bank fee, subtract out the non-sufficient funds that we don't have, subtract out the omission, and we're going to end up with $87.70 on both sides. That's my true cash balance, $87.70. So when I look back up here, again, neither of them had it right. To start out, they were both actually too high. Now, I got to do the journal entries. The first entry that I left off with was the bank fee, so I need to show that. And in your Wiley Plus or in the My Accounting Lab, it's going to show it as miscellaneous expense. I call it a bank fee expense. It doesn't matter to me, or you're going to find in the real world it could be either. But just knowing that it is an expense. So again, in My Accounting Lab, it's going to show up as a miscellaneous expense. This, of course, I have changed recently. Remember my customer? He owes me $150 because I thought he had paid me, but now I got to put it back on his books because he really didn't. Plus the $25 bank fee. But notice I don't call it a bank fee because I'm going to charge him for it. It's not really coming out of my pocket in the end. And I need to show that I lost cash of $150. And then finally, I need to show that the owner took money out of the business. So I need to update by doing this adjusting journal entry here. And it's kind of called an adjusting, maybe a correcting entry. So that was looking at the journal entries, looking at the bank rec, obviously the two better balance at the very end, just like a trial balance and lots of things we do in accounting, they better end the same. This number up here, remember that's our starting, that's what we would really use is, this is our up-to-date ending balance out of our cash, but it's not quite the full number that I want to put, say, on my balance sheet. It's not completely up-to-date. As of the 31st, this is what I thought I had, but then I got to make a few adjustments, and then I get my true balance down here at the $87.70. The final thing I want to look at is go through a couple of the My Accounting Lab items.